Hey guys, welcome back to our channel. Buying a stock is easy, but buying a stock without knowing when and how much to invest in it is incredibly foolish. With the coronavirus affecting the market, some stocks have rebounded powerfully, while some have crashed hard. It's absolutely all right if you are confused about what stocks to buy. But not to worry, because we are here to help you. Here are our top picks for the best stocks you could buy right now. TSLA Incorporated. This is our top pick if you want to invest in a stock through the momentum investing strategy. This is a factor-based investing strategy in which you invest in a stock whose price has risen faster than the market as a whole and usually will continue to outperform the market. Tesla is the world's largest automaker by market value with a market cap of about $607 billion and is one of the world's leading makers of electric vehicles. It specializes in the very popular Tesla luxury cars, mass market sedans, and trucks. Not only that, it also is a clean energy company and produces solar energy generation and energy storage products. Tesla's stock was added to the S&P 500 index with a weighting of 1.7% on December 21st of 2020. Tesla posted a net profit in quarter 3 of 2020, its fifth straight quarterly profit, which is a major improvement after a long string of financial losses in previous years. It saw a whopping net income rise by 146% as revenue grew 39.2% compared to the year ago. The company produced more than 145,000 vehicles and delivered more than 139,000 in the third quarter of 2020, even amidst the pandemic. And with sustainable options on the rise and Tesla expanding its factories across continents, the number won't show a dip anytime soon. Apple Incorporated. Apple was once one of the biggest American success stories, but at what cost? Apple had to rely on a couple of different companies to provide funding. That doesn't really mean it isn't competing for its place in stock markets right now. In the September quarter, Apple services revenue, which includes the App Store, Apple Care, iCloud, Apple Pay, Apple Music, Apple TV Plus, Apple Arcade, and other offerings, rose 16% to $45.5 billion. Thanks to the pandemic and work from home and school at home trends, Mac sales surged 29% to $9 billion and iPad tablet sales jumped 46% to $6.8 billion. Apple's wearables, home, and accessories unit also saw sales increase 21% in the September quarter. This unit is made up by wearables like the Apple Watch, AirPods, wireless earbuds, and Beats headphones. However, not all has been great for Apple in the last couple of months. Apple recorded Wall Street's worst reception ever to an iPhone launch in October with the iPhone 12 debut, as Apple stock fell 2.7% on that fateful day. On January 4th, it closed in the 7 to 8% loss zone, which really doesn't make it a favorable option for interested investors. All we can say for the AAPL stocks is that you should keep an eye on the overall stock market and try not to swim against the general stock market direction. Shopify. This Canadian upstart putting up a challenge against eBay and Amazon became a stock market favorite during the pandemic. Although with the pandemic slowing down, the craze for Shopify stocks are also reducing. However, this totally doesn't mean that it has gone out of the competition. Let us take a look at some numbers. Shopify stock topped a 1,112.51 buy point in big volume on December 16th, and then again surged to a fresh record high December 22nd. Shopify estimates it now has a 6% share of the U.S. e-commerce market, which is more than eBay, Apple, AAPL, or Walmart, WMT, but still below Amazon, which is at 37%. Recent reports suggest that Amazon CEO Jeff Bezos is concerned about Shopify's growth trajectory, and he actually should be because of the fast-paced growth Shopify is seeing. Since the third quarter, Shopify forged a marketing partnership with viral video sharing app TikTok. It also touted record-setting global Black Friday sales of $2.4 billion, which is a huge increase of 75% margin from 2019. To sum up, Shopify does tick off many of the boxes that investors look for. It has been a winner for 2 straight years, solidified its threat against Amazon, surpassed eBay, and according to its positive growth curve, will definitely be maintaining a good stock presence in 2021. You should surely and slowly tiptoe in. Arista Network. After several downslides, Arista Networks have finally shown their heads up in the stock market and have even anticipated double-digit revenue growth next year. Arista also estimates its total addressable market will increase from $23 billion in 2021 to $33 billion in 2025, as it will be expanding beyond its core cloud networking offerings with networking software solutions and services. It has been generating strong profits as it has been addressing giant cloud customers which require reduced sales and marketing expenses. So, should you invest in Arista Network right now? Well, our recommendation would be to sit back and see how much the revenue increases for some time. However, it surely is one of the best tech stocks to consider during the next potential market crash. The Trade Desk. The Trade Desk has been one of the best performing stocks over the last few years, gaining a mind-boggling 4,800% since its IPO in 2016, thanks to solid revenue growth and an ever-expanding valuation. But if we are going to invest in it this year, we need to look at the most recent figures. Right now, it counts for 1% of the ad market, which gives it a lot of room for growth. In spite of the recession, net income stood at $41 million, which is more than a 32% increase since the last year. However, the Trade Desk does have a downside, which is their astronomically high valuation. The Trade Desk stock is trading at a valuation of 299 times trailing earnings. At such a valuation, the company must execute flawlessly over the next few years or face the risk of a significant price correction. This has happened before to companies like Flatly, with their shares plunging by nearly 40% due to the same mistake. Although the Trade Desk will definitely see a lot of expansion and profits in the coming years, it's better to stay at the sidelines for now before there is a better valuation to bargain for. Well, that was our top picks for the best stocks to buy right now. However, it is really important to make sure you do a well-conducted research of your own before you decide to invest in any. Also, if you felt the video was helpful, do not forget to click on the like button before you leave. We will be back soon.